your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Well, a huge thank you to all of our previous panelists. There are some great discussions that have been had so far. Now, our next panel of guests will really introduce why the financial institutions have begun entering the world of digital security. So please welcome once again Anthony Woolley, who's coming back from Ownera, Dotun Rominiyi from the London Stock Exchange, Artem Schneider from Astrella, Lawrence Wintermeyer from Global Digital Finance, and Emmanuel Aidoo from Credit Suisse.
Okay, thanks, Jessica. And yes, what a great panel we have for you now. So we've seen, it's been a great session so far. We've seen how institutions are getting engaged with digital securities. We've seen providers demonstrating FinP2P that's been announced today with the release of the open source specifications for the FinP2P API. So now let's actually talk to some institutions. So with me today, I have Emmanuel from Credit Suisse, Carine from Astrella, Artem from DTCC, Dotun from the London Stock Exchange Group, and Lawrence from Global Digital Finance. That was a very quick introduction because I'm going to get each of them tell you a little bit more about themselves. So Emmanuel, we kick off with you.
Hi, everyone. Thanks, Anthony, for the invite. This is a superb conference, and so far I've been listening into a few of the sessions, really interesting. My name is Emmanuel Aidoo, as Anthony said. I work at Credit Suisse, where I've been for 24 years. I'm a recovering technologist, moving into the digital asset, digital finance space. I think I was pretty early into it, discovered it in, 2014, started the banks. Formed something called the Blockchain Center of Competency at Credit Suisse. In 2015, did a couple of notable financings for some pretty large now digital companies. And then in 2019, we decided at Credit Suisse to start a division called Digital Asset Markets, and I head that globally for the firm. Very good. Thank you, Emmanuel. Carine?
Yeah, thanks for having me. And Emmanuel, I didn't know you could ever recover from being a technologist, so there's good news ahead. I'm president of AST Private Company Solutions. So we created a blockchain-enabled cap table and employee stock plan tracking system. Just my background, I was a partner at PwC for a number of years. I designed and implemented employee plans, executive incentive plans, ended up running a number of companies, being a CEO of some startups, and then I ended up at NASDAQ Private Market and ran the market for a while. I'm certainly happy to talk about what was trying to be done there, but I think it was early days when some of the larger exchanges were really looking at, how do we get into the private market space when the public markets are dwindling? So that's my background.
Fantastic. Artem, DTCC.
Sure. Thanks, Anthony. Hi, everyone. My name is Artem Korenyuk, and I represent DTCC's Business Innovation Group. So in that capacity, I lead innovation, strategy, and design for the entire org. Yeah, we are responsible for defining and executing on the organizational digital asset strategy. We drive research, experimentation around emerging tech, blockchain, of course, being case in point. We do sit across the entire enterprise, supporting all DTCC businesses in the identification, evaluation, and execution of new business opportunities and use cases. And that includes greenfield opportunities and ones that allow us to enhance DTCC's existing capabilities. So we're not talking about doing POCs for POC's sake. We're talking about business-driven value first and foremost. In its simplest form, my job is to take concepts from idea generation through practical experimentation to market validation and ultimately towards a business case. Now, two of the more recent projects that came out of this group and have made it into the public sphere are Project Ion and Project Whitney. Both projects are focused on digital asset securities, with Project Ion focused around the digitization of the clearance and settlement process for public markets. And Project Whitney is really focused on the digitization of private markets. I am very excited to share the stage with this group, and I'm eager to learn from my fellow colleagues and panelists. Now, I am not a technologist, but I desperately wish I was one. So we'll see how it plays out.
Thanks, Artem. And in Abby's session earlier, you'll have seen a great demo of the integration of Project Whitney into FinP2P, which is evidence of the agility that you can get to make these things happen, which is fantastic. Dotun, London Stock Exchange Group, over here with me in the UK.
Thanks, Anthony, and yeah, pleasure to be here in the conference today. So I co-steer the LSEG's emerging technology and innovation function. So we sit at the group level and really cover all of our group businesses, including obviously the newly acquired Refinitiv, and we're really looking at all of the opportunities that we may see around how we can drive the adoption of new technologies like DLT and blockchain across our businesses, and whether that be to serve our internal businesses around building new operational efficiencies through digital transformation, or whether that be looking externally in partnership with clients and institutions across the space to drive new products and services leveraging these new technologies. So that's the focus. I'm also a technologist, background as a software engineer for many years. Spent the previous 3.5 years running technology across 2 different startups, both blockchain centric. So yes.
That's great, Dotun. Very good. And last but not least, my good friend Lawrence.
Well, thank you, Anthony, and again, thank you for the invite. What a fantastic event. I'm Lawrence Wintermeyer. I'm the executive co-chair of Global Digital Finance. We're a not-for-profit global members association dedicated to technical standards, conduct standards, and open proofs of concepts and innovation pilots, where it really is a stewardship platform. We sit between the global crypto and institutional industry on one side, and regulators on the other. We do a lot of regulatory outreach with a quarterly reg-only forum of more than 30 jurisdictional regulators and agencies who do purviews of our codes and standards. And really, I think our job isn't just to promote and accelerate digital and crypto assets on many particularly objectives, but greater financial inclusion and a better financial system for everyone. But the current stage of the ecosystem, I think, sees us dealing more on outreach with all of the information asymmetry in this space between policymakers, regulators, and the industry. I have to admit, long before GameStop and some of these trendy things came along, I was a coding technologist and a very keen trader. I've spent half of my career in top-tier management consultancy in the global financial services sector, and the other half running my own assets. I got involved in not-for-profit work where I met Anthony when I was running Innovate Finance, the ecosystem, fintech ecosystem builder in the UK. So real pleasure to be here, and thank you for the invite.
Thanks, Lawrence. So there you go. So you've got a panel with 2 of the largest financial markets infrastructure providers, a leading investment bank, right, Emmanuel, and a leader in private companies digitization space. I think, and Emmanuel, I was going to say, it might sound like you're sitting in London, right? But you actually work out of New York.
I've been in New York for 17 years, yeah.
17 years in New York, so still haven't dropped the accent. So maybe I'll turn to you first. I don't know if I can call you the grandfather here or not. You've been working in digital assets at Credit Suisse, what, 6 years? 6 years is a lifetime from an institutional blockchain point of view, maybe. So what are the major developments you've seen in the institutional space during that time, and how close do you think we are really getting to institutions embracing digital securities?
Yeah, I noticed that you picked the word digital securities, and this whole summit's about security tokens. But I think to answer that question appropriately, we kind of have to tell the story of the journey that we've all in big institutions have been through. And I think, I ironically got to this space in 2014. And the ironic part is because it was actually a friend from UBS that had emailed me and said, "Hey, have you heard of this thing called blockchain?" Of course, I thought he'd mistyped big data because that was the rage in 2014, and I thought he was completely, off the rails. When I read what he was talking about, I realized immediately that it was going to change everything. But I think, like most people in institutional big finance, we all came to this either through Bitcoin or through the early Ethereum white paper. And it was all about cryptocurrencies back then. And I think the irrational fear is probably likened to, is this going to disrupt and take us down as big banks? And so we did our research and worked out that actually this thing that we've been moaning for the last, I don't know how many years, called regulation, forms of walled garden, and it's not so easy, right? So, and the Silicon Valley fintech soon realized that they had to adjust a little bit in their plans. So most of us got to this from that space. In 2015, we invested in one of the largest, now the enterprise blockchain platform, and that's when kind of the penny dropped for most other institutions, and everyone was racing. It was almost like a fear of missing out to find out what this blockchain was all about. And the narrative became, for big banks, it became, we're investigating DLT, but we're not sure about this Bitcoin thing, this crypto thing. And that was the narrative for a long period of time. And we didn't waste time at all, actually. We really put our heads down and we focused and yielded some really good projects. I would say Paxos is an example, HQLX is an example of live projects looking at the public space. But ultimately, I think many of us got to the station where we figured trying to use this technology to disrupt the existing public market stack at this point in the curve is probably a fool's errand. And we start looking at other asset classes to utilize blockchain and DLT. Not saying that DLT is inappropriate for public markets, but maybe there's an easier place to start. And so just like Ownera and others have realized, private markets, both equity and debt, being several times, depending on what you measure, 4 to 6 times bigger than the public markets, is actually a really interesting place to start. Less technology legacy risk, less integration risk, still regulations there to pay attention to, but certainly less, hurdles and obstacles. And so I think that to answer your question, I think that over the last, 12 months, many big institutional investors have discovered crypto assets, cryptocurrencies, Bitcoin in particular, Ethereum too. And whilst they're discovering this asset class, they're learning a couple of things. They're learning about what I call digital fluency. They're learning what it means to trade 365, 24/7, which we don't do today. They're learning how to settle instantaneously, which none of our asset classes do today. They're learning what it means to have a new level of cyber threat and cyber risk. And all of these learnings, if you will, are going to be directly applied to what will be the next incarnation, I believe, which is the tokenization of securities. I think we're right on the cusp of it. I know some of our biggest clients are asking, what's coming down the road, and it's a truly interesting time to be in this space.
Yeah, I think we would all agree, Emmanuel. And I think those banking executives have also learned how to use Zoom, right? Which comes back to something I said at the beginning of the summit about cultural change, and actually just large institutions getting their head around the fact that they can do all of this online. Totally agree with your comments about the public markets. I spent all my career building electronic trading systems in the public markets, so it's I'm guilty of contributing to the big pile of spaghetti they now have.
The reality is that the reality is on the point is that we spent I think I looked at last year, $470 billion as a top 20 banks on compliance tools and everything else in support of the public markets, ignoring the friction and everything else that happens in a market that's 4 to 6 times bigger. And I actually think that when we implement DLT in the private markets, it will be frictionless and it will move faster than the public markets, which will really dovetail into Lawrence's comment about access, equity, etc., which we'll get to, I'm sure, later in the discussion.
Definitely. And we've got a bit of white noise. I think, Emmanuel, Artem, just try muting and then unmute when you speak. Maybe it will clear the white noise as well. Yeah, totally agree. And the punchline I was going to say is I spent my career in the public markets, and that's why I'm focused on the private markets now, because I know that it is an environment that doesn't have the technology. It is offline. So it's more of a blank sheet of paper, right? And I'll let somebody else clean up the stuff I was building 20 years ago other large investment banks. Okay, so great. Let's go over to Carine. So you're in a position with Astrella where you're basically taking private companies' cap tables, registries, and putting them on a blockchain. So what value does that add rather than just holding them in a database for your clients?
Yeah, so just to be clear, it's not a public blockchain. You know, it's not like you're a private company and your cap table and ownership data is now out for the world to see. So when we've developed this product in the last 18 months, so we were able to use not only blockchain technology, but also artificial intelligence to really build something that allows a company that's privately held to manage their ownership data. And what was so important versus a database type of software is that with blockchain, as you know, in a private company, you've got shares that have different classes, that have different rights and privileges, and it's really important not only to keep track of when you bought and sold the stock and what you paid for it and who you sold it to, but it's also really important to ensure that you keep track of which types of shares you were buying and selling. Was it Series A, Series B? Is it preferred? Is it common? Is it soon to be, you know, a new class of shares? So all of that needs to be tracked, and that's what we do in our system using blockchain. So you'll be able to see what we call the genealogy of a share. So at exit in 5 or 8 or 10 years, when it's time to do the IPO or it's time to do the sale, and a shareholder goes running in and says, you know, I own 1 million shares, and you look at your records and you say, actually, you only own 250,000 shares, you can very quickly and easily, without forensic accountants and attorneys, explain to somebody how they got from 1 million shares to 250,000 shares and who did they sell it to, and you could see as the owner of the company what happened. That's really important as we enter the digital world, and we built this knowing that liquidity would become so important for these private companies pre-IPO. And so we, you know, in interacting with these markets and like interacting with Ownera, are able to send you true ownership, who actually owns the shares, and also all the things you need to know about those shares so that when they're bought and sold, the buyer understands exactly what they're buying. They're buying a Series B preferred share versus they're buying common shares. And that's really important in this market. So we believe by having it built in that way and not a database which overwrites records and can lose history, that this is going to be really important as the digital liquidity markets are built.
Perfect. And I guess Astrella connecting to FinP2P is an example of how the FinP2P ecosystem enables different organizations to do what they do best, right?
Exactly.
You know, whether it's London Stock Exchange or Credit Suisse or Astrella providing those management services. So yeah, it's very powerful, and that's what enables us to move fast, right, as well. Great. Okay. Artem, DTCC. So we've known you guys for a little while, working with Project Whitney. You announced last year. You've been very proactive in this space around digital securities and exploring what can be done. You mentioned Project Iron as well. I think Whitney's focused on the private companies side. Maybe you can just tell us a bit more generally, you know, what's going on, what your roadmap looks like, and how you think about this and getting this stuff to production.
Yeah, absolutely. And let me just contextualize it a little bit. Some of you might have seen the demo earlier in the program, but you've just heard from my fellow panelists around some of the properties and characteristics of private markets that make them such an appealing focus area for digitization. Now, so how does every pitch start? Space A is very fragmented and extremely paper-based. Introducing Solution Z, right? Whatever the context that typically is. In the case of private markets, it truly is manual and paper-based today. And yes, it's extremely fragmented, largely due to a lack of standards. And you'll hear me talk about this in just a second over and over again, because it is that important. But Project Whitney is ultimately our Solution Z, if you will, for the space. To contextualize it as a project, it's essentially DTCC's exploration of the private markets more broadly. Through this project, we designed and developed a digital market infrastructure and a network that we believe can drive significant standardization of both reference data and workflows in the private markets. Now, acting as an abstraction and standardization layer between issuers and their agents, as well as investors and their agents, the Whitney solution is really focused on establishing a standardized way of issuing a private market security. I warned you I was going to repeat standardization. It's supposed to offer a common and central stock record for the management of that security across its life cycle in a consistent manner. And the third, one of the more important components, is the dynamic transaction consent engine, which can facilitate the automation of compliance and suitability rules that we believe is foundational in opening up secondary market liquidity for this space. Now, in many respects, DTCC is attempting to do for the private markets what we've been able to do for the public markets, which is solve for standardization, as we believe that it will significantly lessen the operational burden, reduce risk, and reduce the cost to transact. And the rationale that you've heard Emmanuel outline makes it ideal for that scenario, right? There's a tremendous amount of standardization in the private markets that exists today, and the overall cost to a trade is significantly lower given the volumes of where they are. Similar aspects need to be introduced to the private markets, and that's kind of what Whitney is looking to tackle. Now, in our model, and you might have seen this come out in the demo, but in our model, a cap table provider or a transfer agent on behalf of their issuer can connect to the Whitney solution and have a common and standard way of managing the book on behalf of the issuer, agnostic of the underlying blockchain protocol, be it public Ethereum or permissioned Corda or Fabric or FinP2P for that matter. Now, any secondary marketplace, on the other hand, thinking of the other side of this, right, can also leverage our transaction consent engine to validate that that security is unrestricted and is eligible for secondary market activity in real time, all without the need to perform its manual validation and onboarding of the investor and the issuer, right? And those can vary sometimes by different transfer agents or cap table providers. So again, it's this abstraction layer that looks to standardize the representation of a digital security and automate the compliance and suitability rules around it across issuers and their agents, investors and their agents. Now, the last point that I wanted to really layer in there is, in Project Whitney, DTCC has been very focused on driving client value first and foremost, and ensuring that the technology piece is more of an enabler. So from hours and hours of client discussions that we've had with a variety of market participants, we've witnessed that different clients are on different points of the tech maturity scale, and not everyone is yet ready to directly interact with the blockchain, let alone a public one. So DTCC doesn't believe that this should be a barrier to unlocking some of the efficiencies that exist in the private market space and just need to be tapped into. This is one of the primary reasons why we intentionally designed Whitney as an off-chain solution. Oh no, can't say off-chain on a digital security conference, but there's rationale and merit behind that. It offers our clients a more traditional interface with a front end and APIs, but also offers an abstraction from the underlying blockchain with the option of integrating into a variety of downstream protocols without forcing the clients to adopt and operate a node. To use Emmanuel's phrase, we want people to benefit from the standardization of private markets, even if they're in the earlier stage of their digital fluency. I'm going to steal that and not give you credit, Emmanuel. But to the last point of the question, where are we now? So like I said, we've designed and developed a robust prototype. We've tailored it for Reg D exempt securities to start because it happens to be kind of the largest segment, but designed the system in a very dynamic way that can support a variety of exempt securities and a variety of different customized workflows. Now, we've also engaged the industry in a pretty meaningful way to validate these concepts and are now assessing the demand overall and are considering offering an off-chain digital securities management platform to the private markets. So if you are a private market participant and would like to learn more, let me know.
That's perfect. And I think in all of this, what you're saying, there's a message in there as well that we don't want people to have to adapt to this new technology. The new technology should be an enabler for us to all do what we do best. So you don't want necessarily why should have investors need to know what a wallet is or a private key or worry about any of those things? And in the same way, why would an institution need to think, oh, which DLT technology do I need to, bet the horse on? Where's it going next, etc. I think, it's having something that is an extraction layer that everybody can get behind and enable everybody to do what they do best, right? So you got
Anthony. It's huge. I'll just add one more point, and I'm kind of a broken record when it comes to this. When at a mainstream level, at an end user level, when the technology fully arrives, no one should even care. Just like you no longer care what the processor is on your iPhone. It's just abstracted from you. That is a sign of true maturity and true adoption of technology. And at some point, we'll need to get to that, and we will.
Yeah, I think in the UK, we woke up one day and found we had a cashless society, and it was not something anybody shouted about. But nowadays, you just don't carry money around, right? You pay contactless in shops, and you transfer money, and it's instant. And it needs to be like that, really. You don't really have to worry about it coming. Okay, so we've got DTCC in the US. Across the pond here at London Stock Exchange Group with Dotun. So Dotun, you're with London Stock Exchange, you see the whole ecosystem, right? You're connected to the whole ecosystem, and you understand the full complexity of regulation, both for yourself as exchanges and more broadly for the regulated financial services industry. So where do you feel regulations got to? Are we at a point we can start to take stuff to production from an institutional point of view?
Absolutely. I think, and we've explored this for quite some time now, specifically with some of the work that we've done in the FCA's Innovation Sandbox last year, and then prior to that, in previous sandboxes in conjunction with our partner Ownera. But I think what's interesting is when you look at the regulatory landscape, there was a lot of uncertainty for quite a long time. And I think where maybe there may have been more opportunity, specifically in the context of digital securities, was certainly in the primary markets and in the private market space. And so clearly around issuance and getting custodial licenses and dealing and arranging licenses to be able to offer services to market participants in the context of digital securities, then the space is pretty much wide open. But obviously, as you move further along the life cycle of the assets, it's a lot more challenging. But what we're seeing now is definitely a lot more regulatory certainty. New regimes are coming into fruition when we look at the EU Commission's proposals around the pilot regime for DLT-based market infrastructure. When we look at the MICA regime, which is the markets in crypto assets proposal too, and some of the new consultations that have been put out around stable coins and potentially bringing in a full-scale regulatory regime to tackle those too. It's very, very interesting, and I think what we will see over the next 12 to 18 months is real maturity in some of these regimes that will provide the market with the certainty it needs to be able to start to grow businesses in these areas. Another which was interesting was fairly recently the OCC put out the announcement around permissions for US banks to be able to essentially conduct payments with stablecoins. So I think these are some of the advances that we're seeing in this space, and it will come in baby steps, but over time, each one provides certainty and allows service providers to start to bring new businesses and new innovations in the space into fruition.
Yeah, thank you. And looking across at the US, the payments infrastructure in the US, maybe stable coins provide a way to incrementally refresh what is a very complex national infrastructure, right? It's maybe easier to move faster in countries such as the UK. So certainly with the OCC's statement, if you can start to see things like stablecoin payment for settlement in the US, it will give us a roadmap towards CBDCs and other mechanisms, right? So Lawrence, you're in a really unique position, right? Because you're looking across this whole ecosystem. You're working with regulators, institutions, the whole crypto community, etc. How have you seen that over the last couple of years? Have you seen the posture of institutions change and regulators as well? And where has that got us to now?
Well, it's certainly, we've arrived in a very exciting space, and I think it's difficult for many people, other than maybe the informed viewers or this most excellent panel, to see how important private market securities digitization is, with Bitcoin at 60K, DeFi popping up, and an NFT craze, which seems to have popped out of nowhere at the beginning of this year. And so, Anthony, I think, you and I have been on platforms and sharing this topic for a couple of years. And, quite often the tech community and folks who are trying to tokenize securities have been saying, we need regulators to shift. Well, securities are actually regulated in most countries. We've got that and we've worked that out. And then, as this panel has well pointed out, and something I think institutions have focused on, we've got the benefit of the deep investment in understanding blockchain and DLT technologies. And again, Anthony, you and I met back in 2015 at Infinite Blockchain Lab, just as R3 was announcing. So they're very well invested in, I think, understanding how this technology works. And so I think we're at an aha moment. And I think Emmanuel described it. Well, guess what? Public markets listings have been declining for 30 years. Everybody can see the growth of private equity, particularly private equity as an employer in the US. If you want to invest particularly in new cool stuff in private markets like fintech, medtech, clean tech, what are you going to, go and invest in a Sequoia fund? Can you access that? Are you going to find a crowdfunding platform that has the asset or the segment or the focus area you have? So I think that this is the most underrated and quiet area of development in the digital assets and infrastructure, community, mainly in that, the noise in the main show seems to still be on Bitcoin, and rightfully so. Institutions are also interested in that it is the best performing and yielding asset as a store of value over the last decade, with annual compound returns of about 280%. I think 2 years out of the last decade were negative drawdown years. So, a lot of people are saying, gee, why don't we have an allocation to that? But the private securities digitization space, I think, has just quietly built its momentum, and it's really breaking out this year. And I think this panel has done a great job of putting together almost the alchemy of the recipe why. We've got securities regulation. We've got standards broadly around, custody, register, share transfer, etc. We're just adopting them, and the use case, I think, for digital ledger technology for private markets is fantastic for the reasons that all of you know. And I love, Anthony, that you're on a personal mission of reform, letting other people clean up what you've created in the public markets for the last 20 years. That's a lovely story, but this is a hugely important space to watch in terms of new capital, mopping up all of the capital that's in this space right now, but new capital creation. I think particularly from my perspective, price discovery, everyone talks about secondary liquidity. So yes, I think eventually that is right. But equally, I think we've got an opportunity with ATS and MTF platforms to get a new level of even voluntary disclosure around things like sustainable. So, there's an opportunity to probably capture a lot of things as this space is developing. And it's hugely exciting. It's hugely exciting for GDF to host Ownera and your working group on our independent platform. And it's great to be on a panel like this with a number of GDF members who are engaged in this. So I just think it's an exciting time.
Yeah, thanks, Lawrence. And I think you mentioned 2015, which suddenly seems a long time ago. But I think that was when I first met Emmanuel, and that was at the time. I think I've held this thesis for a little while. You had this sort of bisection. You had the world of crypto, and then the financial services industry went, wow, that's an interesting technology. Let's see if we can adapt that to our world. And these two worlds sort of diverged, right? And you talk to people and they either say, we're in the crypto world and, it's nothing to do with banks. And the banks were going, can we adapt this technology? And those two paths diverged, right? And I think that I've long held the view that those paths will then start to converge back together again. And it really feels, as you said, everything the last 18 months, with Bitcoin, DeFi, NFT, digital securities, that we're starting to see those two worlds converging back together again in the context where everybody should be able to be part of that ecosystem, but it's an ecosystem of finance, right? So you need to protect investors. You know, you need to worry about money laundering. You need to worry about these things, but that doesn't mean it's only a space for institutions, right? It can be for anybody who understands how to deliver financial services. But Emmanuel, this thesis of mine that we had this high road, low road thing, and then it's all converging back again, would you buy that?
Yeah, totally. I think that the road to this, I'm going to say something slightly controversial against my better judgment, but it feels like when Napster came out, that was the illegal predecessor to Spotify. And it feels like ICOs were the legal predecessor to STOs and security tokens. And so to me, I think when we were one of the original 9 banks that came out and invested in R3 before, the rush of the fear of missing out, which was kind of focused everyone in late 2015, early 2016. And I think, whilst the banks were still kind of on the fence about Bitcoin, we did, as I said, knuckle down and think about how the technology can really help us to streamline, what is a really fragmented ecosystem. It's a spaghetti soup of, and the problem in public markets is really about data, and it's really about misaligned data, and that's why the impact on that is the operational risk burden, which is a huge capital drag, right? And so what we're trying to do this time around with privates, and so the other thing I'd say about the space is all the technology that the banks have been spending over the last 25 years is focused on the front of the stack, the front office. We've got AI, we've got algos, we've got all this technology, and what it serves to do is drive profit, like drive margin down, really, so it's compression. So you've got this technology driving margin down at, let's make it up, 10% per annum, driving out margin. But on the back end, on the cost side, on the post trade, you're driving out cost at a rate of 5%. What does that mean? It means you're on a collision course to crash into the mountain, because you're getting rid of costs on the revenue side faster than you get rid of them on the backside. So technology like DLT is essential to the public markets, and I think the privates will show us the way. Ultimately, what we need to defend against is private markets you've got to look at why they're inefficient. They're inefficient because I know they exist in paper and list in spreadsheets, and they basically exist in your lawyer's scratch pad. You're relying on exemptive rights and safe harbor rules, and you don't want to break them. So that's where the DLT comes in. The smart contract rules enable us to ensure that. So I think most people probably don't get what's different about where we are today versus where we're talking about digital. And where we are today, I call that electronic. What we've done is we've used technology to automate human processes, and we've done it, faster and faster and faster. But the side effect is we've got misaligned data. DLT allows us to do something quite different and to build a whole new stack where the actual asset is self-governing, ensures it's basically the same wherever it's ledgered, wherever the protocol that it's ledgered on, and that now we all have the same view, the same. I don't want to use my technical jargon, but it's effectively a state manager. That's what the blockchain is. We're effectively having the same state manager. So back to your question, ultimately, we have this huge opportunity. Many of our large banks are looking at private markets as the way to kind of generate alpha, because as I just described, in the public markets, it's been a drag. Margins are coming further and further down. It's a crowded space. Private markets running efficiently is really interesting. I'd say 2 more things, and I'll promise I'll shut up. The first thing is there's this misnomer that by creating fractional ownership and making things settle faster, all of a sudden you're going to create liquidity. It doesn't. Liquidity is because people want to buy the damn thing in the first place. It's got to be a decent asset. The other thing that you have to be cognizant of is, and this goes back to Lawrence's earlier point about the equity gap, right? There are growing numbers of private companies that want to stay private, less and less going public. And what that means is that only qualified or sophisticated, depending which jurisdiction you're in, qualified institutional buyers, quibs, or sophisticated buyers can get access to those, which basically means 95% of the population can't get access to the world's fastest growing companies. That to me is a problem. And I think the DLT should be applied. We should have a framework that allows mum and pop to invest in unicorns in a safe way and not be exploited. And so we need the right framework, the right types of disclosures, not as much as happens in the public domain, but enough that, you know, people aren't getting the disparity of information doesn't cause harm. But we really use this as a lesson to build a more safer, regulated, but efficient private market. Now I'll shut up.
No, I totally agree with that. And that was a great joke, because you started off by saying, I'm going to say something really controversial and I'll probably regret it, and probably your comms team breathe in. And you didn't say anything controversial at all. It was a lot of common sense.
Was referring to Napster, but you know, it's in the past.
Yeah, we remember it. And this all must be music to your ears, Carine, living in the world of private companies, right?
Yeah.
I mean,
well, I was going to say, I'm sitting in the middle of Silicon Valley right now, and I'll tell you, you know, there are two headwinds to what Emmanuel just said, and I completely agree with 95% of the population doesn't get to participate. But there are people who don't want to make this easy. So, you know, there are investors who have made this incredibly complex, and I, you know, applaud what Artem is trying to do, is to try and bring standards. But I'll tell you, many of our clients and many of our investors don't want standardization, don't want to make this simple, which is what puts people like us in business. So I think we've got some headwinds there in terms of whether they're going to allow liquidity, whether they're going to, you know, support what we're trying to do. And I think the other thing is that the legal community really hasn't adopted this yet. And that's the other thing that we find, is that we really, you know, it's the regulators, and I think what Lawrence is doing is great, but I also think the legal community is a little bit afraid of, you know, blockchain, crypto. You know, the first thing they think of is, oh, this is all Bitcoin. And we really need to spend some time educating the lawyers to understand that this is not so scary.
Yeah, very true. And I think, you know, we talk about taking the private markets online, taking private companies online. We need to do it with the companies, right? So in the past, a lot of private venues, you know, you've got people running around trying to buy stock in a company, and the board of the company don't want to sell it, and all of this fun and games. But this should be something that, as Emmanuel says, private companies are not going public so quickly. You've got high growth companies where lots of founders and employees sitting on a lot of stock. They can't sell it. And so it's having in an environment where private companies can go online, create some liquidity for part of their cap table, but not lose control. So maybe you're trading, you know, I mean, I talk about digital shares class where it doesn't have voting rights, right? And these sorts of things. So it's also having an ecosystem that works for everybody, the companies, the institutions, and the investors, right?
Can I just jump in real quick? Because I think people who are listening to this, particularly with the events of the world of the last, you know, year or so, should be looking at this as an ESG play. And many people have got this idea of, you know, they focus on the E, and they don't have a lot going on the S, and probably less on the G. But on the S, focusing on wage inequality has been laudable, it's been great. But now let's focus on wealth inequality. And we know that the equities markets has been a place where we've been able to help people with wealth inequality. So I think really tackling this issue of, you know, the 493 US companies that are unicorns aren't going public anytime soon, allowing a safe way for folks to actually access those high growth companies is essential to closing the wealth inequality gap. And, you know, there's a story there, I think, in the ESG plan.
Yeah, well said. Point very well made. We're just over slightly over our time by 30 seconds. Maybe just to close from each of you very briefly. So we've seen in 2020 4 markets break out, right? We've got institutions getting engaged in Bitcoin and Bitcoin staying up. We've got DeFi, we've got stable coins and NFT. So digital securities, are they next? Are we going to have this digital securities breakout moment? Dotun?
Absolutely. It's very much coming. It's on its way. And some jurisdictions it's already there. But overall, yeah, it's almost a certainty, I would say.
And where the DTCC is sitting, Artem?
I'll go even a step further and I'll keep it clean and crisp. The cat's out of the bag. It's an inevitability.
And Lawrence?
I echo all of this, and again, really picking up on Emmanuel's point, I think this is an important opportunity to really not just get a fair and equitable system that everyone can invest in, but get investors access to high growth and an opportunity to capture ESG and sustainable investments and allocate to them among the big priorities, which are diversity, climate action, and biodiversity. The trinity right now, and a lot of stuff is going on in the private markets. And Anthony, just one thing unrelated to private markets, securities digitization, which will break out. I really thought it was great in a recent chat Jeff Banman had with Hester Pierce on Bitcoin ETFs. She made a comment and said, look, we've applied a level of scrutiny to these that we don't to other things, and we've got to ask why we're doing that. And I think of the particular context of the technology in Bitcoin. But her comment around the US cap markets I felt was really refreshing. And she said, the US capital markets are a treasure, and we need to be able to open up access to them for all of our citizens. And so that type of narrative now is coming, and it's her own narrative. It's not on behalf of the SEC. This is her narrative, but I think that's really refreshing and bodes well for this, which from a regulatory perspective is one of the safest pools to swim in relative to a lot of these other volatile assets.
Very good. Yep, I know we're calling overtime slightly. Emmanuel, you're a buyer, so
I'll just be saying yes.
I'm going to give Carine the last word, right? Carine.
Well, hey, I agree with everything that we said. This is happening. It's going to happen. I think we've got to get people educated. We really are talking about some complex things that aren't that complex. And so I'm always one who says, let's really do a PR campaign here to let Main Street understand, because they get all this. And they love the fact that no one else gets it. And so I agree. I think we need to focus on this. I love what you said, Emmanuel, about ESG. I think this is something that hasn't been tied together. So appreciate being part of this and talking about it. And I think this is doable today. So let's just get it done.
Fantastic. Great place to finish. We're taking this to Main Street. Thanks all. Fantastic panel. Great to have you all on. And let's roll on to the next session.